following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 14th, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. In fact, let's make sure we have an extraordinary weekend. And you know the easiest way to do that? It's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but really, more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, you can call us at 727-445-1044. You can send me an email, steve@tfnn.com, inside the Tiger's Den. Pings are welcome. So let's get to it. Let's go ahead and get this show started on Fantastic, Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 65 points at 18,164. S&P is up 4, trading at 2136. NASDAQ Composite up 8 points, trading at 5221. Russell 2000 up off 1.5 points. DAX closing up 166 points. FTSE closing up 35. Gold is down $1. Silver is up 1 penny. Light sweet crude back 33 cents. The leader to the upside in the markets, it's ICE Intercontinental Exchange up $4. Acuity Brands up 4. BlackRock up about 4. Goldman Sachs up 3. Fleet Core Technologies up about 3. Humana up a couple of bucks. To the downside, not much to the downside. Really, oh, there we go. Now we got it. Boston Beer, Sam Adams. We've taken a look at that. That stock is in trouble, as I recall. Anyways, it's down $11 today, another 6.5%. Bluebird Bio down 11%. Natural Health Trends. Looks like it has a bad EKG. Somebody needs to get those paddles out. It's down 23%, off $6 out there. Altasource Asset, that's down 15% or $6. Taylor Devices down 25%. Holy shnikes. There are a few things that are a little bit down this afternoon. So let's go check out the markets. What are they doing? And what we're going to do is we're going to focus on two of the charts, or a couple areas where it's most important for us to pay attention to what these indices are doing. Which one do you think I'm going to mention first? You're exactly right. We're going to go take a look at the Dow. Why are we going to take a look at the Dow? Well, let's just take a look at the daily chart. You know, there's just no reason for me to it's about being consistent, right? You're listening on the show here. That's why it's easy to make both the bullish and the bearish calls out here, because consistency is what it's all about. Knowing what to do and doing what you know, two totally different things out there. You know exactly what I mean. Now, if we take a look at the daily chart here for the Dow, we can see that right now you're trading at 18,181. Right at about 18,181 is Stevie's red line. That's that oscillator unchanged line. That matches the bottom panel of my screen out there. When price gets above that, turns that price oscillator up. What happens when it turns up? Could be a bottom. Could be a bottom. It's either going to be a retracement, a bounce, or a bottom. In this case here, it is more important for us to pay attention to that because of yesterday's, now what we'll call a confirmed seventh wave move. Pretty good chance. Now, though I can't give you 100% assurance, but I'm just thinking at this stage here, pretty good chance we're not going to take out yesterday's lows. If we don't take out yesterday's lows, then we have Stevie Wonder singing in the key of G. Ordinarily, we would say that is a buyable pattern. In fact, we would always say that is a buyable pattern out here. You and I, you know better than I do. How often do we see those seventh wave moves turn out to be reversal areas? Yeah, exactly. You just don't ignore it. Now, confirmation today would be price closing above that oscillator, and just figure it's right around the 118, 181-ish type area. You and I are not going to worry about a few bucks. At this stage, it's acting as resistance. That's the message of this. And hey, just as beautiful as that seventh wave is, nothing more bearish than a failed bullish pattern. So moving one tick below yesterday's low at any point in time here, well, not any point in time, but we'll say over the course of the next several days, would be sending you and I a very clear message out here that a very bullish pattern has indeed failed. So on the daily chart, what we know about the Dow is it says to us, this counter trend rally that we've seen over the past day and a few hours should be over. That is the message of the Dow. Now let's go check out the Dow futures contract. What do we know about the Dow futures contract? Well, you and I have been getting many of our signals from the 30-minute time frame, so let's in fact go take a look at the 30-minute time frame. And what do we have here? Well, I don't know about you, but I see an A to B equals CD to the upside. So let's go check that out. That A point down here, yesterday's low, that took place beginning at around 11 o'clock in the morning. Your B point came out here, looks like at about 3 o'clock in the afternoon. Then you pull down into about 20, 30 hours. You can do the math on that to figure what that is. Your uno to uno, your one-to-one, A to B equals C to D, give you a price prediction of 18,170. Now, you've got to give the Dow futures a little bit of headway here. It overshot the runway. I'll tell you what it actually did as soon as I pull up the data window there. It got up to 18,134. No, that can't be. 18,177. See, I was just joshing you. And what does that mean? Where did that come from, that phrase? I was just joshing you. Joshes must hate that, I guess. And I apologize to any Josh that's out there. But where did that come from? You would probably know. In any event, you get up to the 18,177 versus 18,170. So you've got the 1-to-1 A to B equals CD pattern that has completed. Now, what else completed? What does H.M. Gertley say when you have missed out on a significant trend? And you'd have to ask yourself the question, was there a significant trend from that little spike into 930 on October the 10th when price got up to 18,320 all the way down to yesterday's low at 17,870? And the answer would be, yeah, that is about a 1,000-point move. So now H.M. Gertley, he's sitting there, believe it or not, 6 feet under or so, or he could be up in, probably not 6 feet under, right? He probably didn't last down there too long, and he's upstairs nudging people to say, hey, that's a Gertley sell, that's a Gertley sell, that's a Gertley sell. And if we take a look at retracements, although he was kind of like, hey, who is this Fibonacci guy? He's pretty smart. Well, if you take a look at where price got up to that 0.618 area, which was 18,147, you can see that the body of the candle, the true essence of price, basically just hovered right around there. So you've got a Gertley sell pattern inside of the Dow. Now, what has it done since then? What objective? Because every Gertley pattern, this is a beauty, folks, every Gertley pattern has 5 outcomes. So when we get back from this break, let's go check out those 5. Let's go see where we're at. If the Dow doesn't take out today's high, we'll know the daily chart will be back below its oscillator unchanged line. We'll know we've got a Gertley sell pattern. It will say the rally is over. Steve Rhodes with TFNN.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at the Dow. We're focusing on the Dow because I think that's the area where the market is teetering. So we've gone to the daily chart. Now we're down to the 30-minute chart, which has been providing us with some great information. Debbie writes in with regard to the Gartley pattern. How do we know that that's the completion of it? As you've so it's a great question. And here's my take on how we know that that a Gartley pattern has in fact formed out here, and that is, as you've heard me say many times, that you have to wait for the cavalry to arrive. You need to understand your bullish and bearish Japanese candlesticks. They are so important if you are a pattern recognition trader, because that is where they have the most meaning. I can tell you, in between the move, it's just a little bit of it's nice to know, but it really just doesn't have a whole heck of a up at swing point highs and lows and things at areas of support and resistance, or when patterns complete. That's and if you'd like to learn these, which you really should, because this is the language of the markets, then come over to the homepage at TFNN.com. You'll see an opportunity to sign up for my newsletter service, which is normally $149. This time it's $49 for the month. You get a workshop, which is a week from this past Wednesday, so next Wednesday. There I'm going to teach you about horizontal, diagonal support and resistance areas, but you then get access to 4 other workshops. And one of those workshops is going to teach you about Japanese candlesticks. So at the completion of a pattern here, because I'm not full of bull, this was a bullish move out here, but that bullish move was thwarted by one of your favorite candles right here. So as that pattern was completing, we had the opposite of a hammer, its cousin, the shooting star. Really, it looks, the difference is where the body of the candle is forming, and the difference is the trend of the market. This was in an uptrend. You get a shooting star. Then an hour later, because it's a half-hour chart, a little bit of a bearish engulfing candle at 10:30. So we've got, this is a significant area of resistance. If price moves above it, That will be very bullish, nothing more bullish than a failed bearish pattern out here. And in the case of H.M. Gartley, there are 5 outcomes. Now, he didn't know that at the time. We, though, because of today's technology and tools and studying these patterns, you and I know that there are 5 different outcomes for a Gartley buy and sell. If we go take a look at those outcomes, they're very easy to identify. Outcome number 1 is going to be that 0.382 retracement of that entire pattern. What's the entire pattern? The A to B equals CD. So yesterday's low up to the top of today's shooting star candle. What, in fact, did the Dow futures contract do? Moved right down to the 0.382 retracement level, 18,058. What happens when you get down there? Look, you and I are not the only ones that know this rule out here. What happens is, that is where some people, depending on their trading block, depending on what they're doing, this is where people will get off of the elevator. The elevator in this case here looks like it's the elevator on the way down. Now, how will we know if price is going to move to the downside? Well, we won't really know until we see it happen, right? But the next price move will take us to 17,986. And the one after that is 17,934. Can the elevator go right through a floor? Well, I don't know. You tell me. Do you ever hop on an elevator and you push a button and you pass all of these other floors? Of course you do. And so can price out here. What we use these for are guidelines, oftentimes very, very good guidelines. This could be forming a Gartley buy pattern as well. And I'm not going to go into that and show you what that looks like, but it could actually be doing that as well. So outcome number 1 has been achieved. Let's assume that this is a proper end of the bounce out here. 17,986 will be next on the list, and 17,934. And then the whole key is if price gets through that 17,868, that becomes your outcome number 5. And outcome number 5, that A to B equals CD, will give you what the downside could look like if, in fact, we have timed this properly here. That says you're looking at a price move, a price objective of 17,725. You've got to get to the other floors before you start focusing on 17,725. But at this stage of the game, that is what the Dow is communicating to you and to me. Now, let's go see if we've got any messages out inside this market that back this up. Okay, so what are we going to go look at out here? Let's go look at the, what would you think we're going to go look at? What would you do? So what would be your next move after you identified that, you know, the strength inside the market, believe it or not, has been the Dow. It has been the Dow from the standpoint of where its oscillator and change line is as of, and because it got to that 7th wave, right, a potential bottoming pattern out there. And then we've gone back and we've seen, okay, well, that intraday bounce, if you will, off of the 30-minute charts, that looks like that pattern is done. So where would we go to next to assist us with regard to, I'll give you a hint, the liquidity gauge inside the market? What would we do? Yeah, we would go take a look at the VIX index and see if we can figure out what's the message of the VIX index and then try to apply that to the S&P 500. So as we come over here and take a look at the VIX index, we know a couple of things, do we not? Yeah, we know a number of things. One of the things that we know is that the 50-day exponential moving average is at 1406. Right now we're trading at 1591. Prices above the 50-day exponential moving average. Does that say lack of liquidity or plenty of liquidity? Lack of liquidity. When lack of liquidity is in the market, what does that tell us? That tells us markets can very easily go down. You'll see Stevie's blue lines on the chart out here. The one that you're most interested in is the top one at this stage. Once price gets above that, you do start looking for markets to form a bottom. You start looking. But in this case here, we've got more to go to the downside in the market. And we're going to see, this could just be, quite frankly, forming an A to B equals CD to the upside. You might say, well, what the heck does that look like? What was that kid's name? Lewis? No, it wasn't. I don't know if it was Lewis or something like that. But here's your potential A to B equals CD to the upside inside of the VIX index, taking us all the way back to the highs out here from September the 12th in that 2099 area. Now, I'm not here to give you the A, B's, C's, and D's with regard to the VIX index, because that's a little bit irrelevant. Right now, what we know is the VIX index is trading above the 50-day, came back down, tested Stevie's blue line out there, and found support. That's not good for the bulls inside the market out here. All we've seen is now the VIX test support. We've seen the Dow test resistance. What does that say? It says whatever, however, assuming the market's closed like this, all I can do is give you the lines of demarcation to look at. Look, at the end of the day, and you know how I don't like saying that, but at the end of today's trading session, I don't mind saying that. If you were to see the VIX index close below 1531, this whole scenario will have totally changed. Why? Because you get below 1531, and I can assure you, as much as I can assure you, which is not a whole lot, but I'll do the best I can, says that the VIX index heads to 1406 as its next move. That would go ahead and put some energy, some buying into the stock, into the ES mini, or in the ES mini and the S&P, the rest of the market as well. So the VIX index is saying, nah, not buying it, not so fast. Not so fast out there. So that is the next message. Where else could we go to take a look at things? We could look at the summation index. We could look at the advanced decline oscillators. They're all below zero. They're below zero. Who is presumed to have control of the market? That's right, sellers. So it's been a nice bounce. And you and I saw that rubber band stretch yesterday, move down to levels of support, and form nice Gartley sell patterns, doing exactly what they're supposed to do. Nah, it's not just the Dow that has a 30-minute Gartley sell. It's the Russell. It's the NQ. The ES missed it by a tad. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 85, S&P 6. If we take a look at speaking of the S&P 500, we'll go ahead and put Stevie's oscillator and change line up here. That also is a workshop that comes with signing up for the newsletter service today. Get a weekend coming. So if you're a technical analyst, if you're just learning this, you're going to get, in essence, the entire 4 courses is as close to a Master Trader Series course that, quite frankly, we should charge at least $1,500 for $49 or $149 if you've been a previous subscriber out there. So, I really would encourage you to do it. I'm asking you to do it for you, not for me. I've already done the workshops. I already know this stuff, and I'd like to be able to share it with you. If we take a look at the S&P 500, I can see the trading tools that you'll be able to pass down to your kids. Now, don't do it for yourself. Do it for someone else. If we take a look at the S&P 500, you'll see that what the S&P did today was test and reject that oscillator on change line, 2148.23. So, it's, again, another indication with regard to this counter trend rally, and it was a nice one, that it's over. It's over. That's the message. So we got that same message in the Dow, in the S&P 500. I've given you the evidence out there so that you can make your own choice. There's not really much left for me to be able to do out here. Now, what we email-wise, we've got an email. Came in from a phone number, of all things. You got to love that. Hi, Steve. Can you pull a chart on Nugget? Do you see this as a bottom here? And each day I get emails from several people with regard to either JNUG, JDDXJ, whatever. You know the cast of characters. Let's do this. Not that I don't want to answer the question. I do. It's just that each day we should look at something a little bit different. So we'll do that. Let's go take a look at the XAU. All right, so we've got the gold bucks index out here, which really is helping to assist in answering the question with regard to what's going. Hey, there's that. I love that. What's going on? So if we take a look at the XAU, here's one thing that we know. So to answer your question, do you see a bottom here? The answer is I do. In fact, when you take a look at this chart, I know that you see a bottom here too. What is it that you see? Exactly. You see one of those other tools that's included inside the workshops if you sign up for my service here today, this afternoon. Why wait? You see price moving down. I give you the formula for this. You see price moving down, doing it with less relative energy, and the cavalry, in fact, did arrive inside the XAU. Voila, 2 days ago. 2 days ago, nice little bull sash candle that formed, a little bit of follow through yesterday. The problem is, and you're seeing it right smack dab right up front in HD nonetheless out here, price was unable to get above that oscillator on change line. Not good news. So do I see a bottom? I do see a bottom trying to form. I see, though, the sellers are the ones that are still in control here. Look, there is nothing more bearish than a falling price oscillator below zero. We're below zero. We've been below zero here for a while. We need to see price get above that level. You're going to say, well, what is that level, Steve-O? Just give it to me. Lay it on me. And I'm going to tell you it is I'm going to give it to you. I'm going to give it to you, all right. Let me see if I can actually get that number for you here. It is 82.57. 82.57. We're trading about 81.66 right now. 82.57 is the number that you need. Now, if we see a close above that, we'll have two patterns that would suggest that the XAU is going to, at a minimum, bounce or bottom. I would say, because this is as close to a Gartley buy pattern as we have right now, if we take a look at this, and this is with the XAU, let me just pull this back a bit here. I may need to switch over. Yeah, I'm going to switch over to a different chart for some reason. So give me a moment to do that. Come on, work with me. We're on live TV. Well, we've got a little bounce going here. But let's take a look at this. Let's go back and take a look at the XAU. Give me a moment to do that. There we go. Here is the if we take a look at the Gartley, you can clearly see that here is a nice Gartley buy setup, right? Let's get rid of the profiles out here. Give me a moment to turn those off. Then it'll be a little bit easier to take a look at the chart. What is it, Janet Yellen? She's the one that's trying to move the markets out here. She shouldn't be doing that. Now, let's take a look at the A to B equals CD pattern out here. Your A point out here on the trading day of August 11th. Your B point down here is September the 1st. Your retracement was, let's see, the high on September 8th, 100.86, 101 on the 7th. So look, what way was it here? It was 101.36. 101.3. So the high out here looks like September 22nd. Now, you'll see that price has not hit the 1-to-1 A to B equals CD to the downside. That would be 76.08. So as long as price remains underneath that oscillator and change line, that still is possible. But we use this as a guideline, not as a drop dead. It's got to hit those numbers out there. So the answer to your question is, yeah, looks like the XAU is in fact trying to form the bottom. So its first indications are in, and this could really be a doozy, right? When it does form, let's just say at this stage here, let's assume that it did form and the price was above the oscillator and change line. Then what we'd be looking at, 5 different potential outcomes, right? With outcome number 5 being that Gartley buy pattern set up a new A to B equals CD to the upside. And XAU-wise, that would take us to a price projection of 156.23. You're at 45.62 right now. These are all the reasons to go ahead and try to take a stab at the appropriate time inside of the mining sector. That is what it says, folks. So I hope that answers your question with regard to Nugget trying to form a bottom. So let me see if there's any other email questions that have come in. I see some discussion here. So, Steve, would you recommend going short over the weekend? If so, what are your parameters? I don't know that I could have given them much more than I did, but in summary, as long as the VIX index is staying above the price level of 1530, the message is going short. As long as the S&P is below the price point of, come on, I don't know why things are freezing up on me, but trying to give that to you. Wow. Oh, I see what I did. As long as the S&P is trading below, wow, that didn't work either. I'll be a son of a gun. All right, let me try this once more. There we go. As long as the S&P is below 2148.42, that's the S&P cash index, the message. Yep, short. Would I go in over the weekend? Yes, I would. The message and the Dow is the one that's a little bit of a wild card out here. If we take a look, I'll just put this up on our chart here. So the clear message, when price is below the oscillator and change line, it rules out one side of the market. That side of the market, in this case here with price below, it would be the long side of the market. And if we take a look at the indices, take a look at the composite, look how far below that oscillator and change line it is, 52.90. Okay, hugely below, if we could use the word hugely. The wild card here is the Dow. Here's the Dow Jones Industrials. We're going to see prices trading basically right on. In fact, price is just slightly above that right now. That's the only pattern out there that actually confuses me a little bit, because it is not the same as the. Hey, take a look at the NDX 100 out here. NDX 100, as soon as I can find it right in front of me, well below that oscillator and change line, 48.65.26. Take a look at the Russell 2000, way below. Bullish markets work best when the Russell 2000, the NDX 100, the NASDAQ composites are leading, and they ain't leading as we speak right now. Steve Rhodes with TFNN. Right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and Steve in Nashua, thanks for calling in, and my apology for not seeing your call out there. I know that you hung up because when I was reviewing the XAU, you were calling in about the GDX, so that answered your question, but my apology. We've got a new system, an upgrade that is we'd like to actually downgrade. It's just with regard to internal communication system between the hosts and the den. For me, it's like it just doesn't work out. I don't have you have too many screens, not too many screens, but I have enough screens going on so I can keep track of everything. For my trading, for you, what's going on inside the markets. And we used to have this system where something would pop up on my screen. I could easily see it to know who was calling and so forth. And it doesn't pop up for whatever reason. And I don't know, maybe I haven't figured out how to get it to behave like it did. So, Steve, my apology to you, but thanks for calling. I appreciate it. Question that came in is my thoughts on Twitter now that Salesforce has come out publicly and said that it ain't going to buy it. So if we just take a look at, forget about the news and the rumors and so forth. If we take a look at Twitter right now, it's trading at 1661. It's trading below a swing point out here from a few days ago that had volume of 105 million shares. You're at 32 million shares. So it's taken out a swing point, which could be the A to B, could be the B point of a A to B equals CD to the downside, but it's doing it with light volume. It's not likely to get 105 million shares today, but hey, anything can happen. I mean, they are clicking. There's a lot of selling that's going on. What can we say about Twitter? That has not been said. Let me just take a look at the monthly chart. Well, this looks basically like trash. Let's turn off the profiles. It's below all profiles out there. So profiles are not going to save anyone inside of Twitter at this stage. Volume-wise, the actual low looks like that came in here. Was it the month of February? Let's see. That low was 1391, 1373, May. And that high is 1549. So if you get inside 15, now that's a monthly chart. So let's just go to the weekly chart. The weekly chart, if we look for volume out here, where's this thing? All we can really do is go back to its swing points, and it looks like it's headed back to the lows from a weekly perspective. Volume this week is actually pretty good, 230 million shares this week. And, in fact, volume to the downside is muy bueno. So the weekly charts are saying sayonara, baby. which would take you back into that May time frame, somewhere between 1373 and 1510 is what it looks like from a weekly perspective. TWTR is what we were looking at. Okay, I don't see anything else that has come in. If there are some other pings inside the den and I just overlooked them, please re-ping me, and then I'll go ahead and get to it. Let's take a look at, in the meantime, let's take a look at some of the individual stocks and see what's moving out here. Let's go take a look at Sam Adams. If we take a look at Sam Adams trading down 5.6%, $9. This is, again, the weekly chart. Well, let's take a look at the weekly chart. It is the end of the week, for goodness sakes. And so what is Sam Adams doing? Clear descending price channel. No question about that, right? You can clearly see that. So Sam Adams, that price channel, looks something like this, right? That's a pretty good price channel. That's along the top. Here's along the bottom out here. If we take a look at where Sam Adams is headed to, looks like it's headed to for the breakout area from 2012, December 10th, 2012, about 1.3 million shares to the upside. You've done about 954 today. Looks like price-wise, this is headed for that area about 134 and change, to as low as 112.41 out there. So Sam Adams, well off of the highs. I guess people aren't. It's October, aren't they the ones that do the October beer or something? I know they do. Right? They do a October beer. Hey, we need to have an Oktoberfest, do we not? When is Oktoberfest, by the way? For those of you, have you ever been to Oktoberfest? I have not. I've wanted to go. That needs to be on my, I hate to say a bucket list, because that would say you're out the door, and I don't like the idea of thinking we're out the door. But I think that would be a fun. Are you a beer lover? I think Oktoberfest. I've got a buddy who has gone to Oktoberfest, and he says it's a pretty good time. I can only imagine, but I can only drink so much beer. I like dark beer, so I don't know how they. Some people can drink just gobs of that heavier beer. It's great, but man, it's hard to pound them down. In any event. That's just me. Okay, so Sam Adams, we know that is headed south. If we take a look at the Intercontinental Exchange, here's an equity that's headed where? North. Oh, this stock chart looks pretty darn. This, again, is a weekly chart. And what's wrong with this chart? Is there anything wrong with this weekly chart? Well, we're not going to find out, because instead we're going to go to Buffalo, and we're going to speak with Chuck. Chuck, thanks for calling. How are you doing this afternoon?
Very good. I'm looking for FCX. Do you think it'll go to 6 or will it go higher? That in coordination with GDX.
So, if I take a look at FCX, I'm going to have to find another chart here for you. Let me see if I can find my FCX chart, because this actually trades in direct correlation to the Australian dollar. So let me try to pull that chart up here first, and let's see if we can figure out what the Australian dollar is doing out here. So that's one of the charts. That doesn't show as much of the coral. It does. It's not. It's more difficult for this tree. But as long as I've got this up here, I take that back. Okay, so if we take a look at, knowing that the Australian dollar has a big influence on this stock chart, take a look at, this is a beauty. I mean, if you are a believer in the trend is your friend, well, what the Australian dollar did yesterday was it moved down to test the trend line. And today you've got a nice move northward. So with regard to FCX getting down, I think you said to the $6 area, if you are a believer that the Australian dollar is going to influence the way that FCX is trading, FCX has bottomed. So now let's go back to my other chart here and just take a look at FCX on its own, because that helps us to answer the question with regard to what's the Australian dollar doing. So that is good to know. That would be good if I wanted to trade FCX. And now let's go take a look, see if we can put in some profiles out here. So give me a moment. Profiles in Courage. Let's take a look at those. Those are the daily and weekly. And we can see that FCX has come right down to a level of support. It's trading right above the daily, which is at 960. As long as, and it's testing a swing point. Oh, this is a weekly that we're looking at. So it's testing the swing point from the week of September 12th. That had 237 million shares on about half the volume. So I would have to say that FCX is a candidate for a buy, and the answer is no, it will not get down to $6. Not unless you see the Australian dollar fall apart. All right, Chuck?
Okay, and what about GDX?
GDX, all the mining equity, the mining index equities are trying to form a bottom. And they've given us signals. They just have not confirmed that bottom yet. That's the GDX, that's the XAU, that's the HUI, that's NUGT. It's all of them.
I think by the 19th is when we have a blue swan event. You know, we're going to have either like a big earthquake in California, according to WDGAN. It's going to happen on the 19th.
You know, the only guy I know that can call earthquakes is K. Rico, who I hear from every now and then. But so I can't answer that. I will say FCX, though, with regard to FCX, it will follow the Australian dollar. So if you're looking for a buy in the mining sector, FCX gave you that signal today.
Okay, thank you. Bye.
You betcha. You betcha. This is Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Now, of course, that other side of the trade with regard to FCX is the Australian dollar, right? We went and took a look at the Australian dollar. That is on my screen right now. We're just simply looking at a simple trend line, just connecting, in essence, the lows or very close to the lows of that trend. You can see how well price has been able to stay within it. You're getting a nice bullish engulfing candle today. You can see where the market was, and this is a daily chart. Was in a little bit of a downtrend, had a little doji as it touched that trend line. Now it's moving higher. higher. So for those of you that are currency traders, you ought to be looking around for the Aussie dollar out there. And as long as it trades above 0.7603, not to be exact, but above 0.7603, it's trading above its oscillator and change line, and that is a beautiful thing, as we say in the technical trading analysis division here at TFNN. Okay, so let's take a look at, to round things up, the H.M. Gertley, he's dancing. He's dancing upstairs. He's got his bear horn out, if there is such a thing. He's got his what would you call it? I guess they call. Why do they call it a bull horn? There must be. I need to figure this out. Why do they? He does have his tab. In fact, David White, our man, the polar bear, my favorite polar bear out there. I heard yesterday. I was kind of in and out. Then I was finally out. But as I was leaving, I heard him say something about a perfect Gertley pattern. It was something he was showing that was a perfect Gertley pattern. I just heard it in one ear. Oh, he says it was a gift. It was a GFI. But that we'll call that the perfect Gertley pattern, GFI, and we'll just have to call today's 30-minute charts in the NQ, the YM, and the Russell 2000, the TF equity futures contracts. We'll have to just line them up and say those two were perfect Gertley patterns out there. So, and that's a great thing. It's lovely to always see these patterns come into play to assist you and I in navigating these markets. Each of us contributors here at TFNN, love to be able to teach you these tools out there. The easiest way to do that is to, attend a workshop. It's not that easy to do during a 1-hour show. And I mean, you can listen in, and we want you to listen. But, if you really want to condense decades into an hour, which is really what you should do, then sign up for each of the workshops that we put on. Of course, in my case, you've got 4 that you're going to be able to access for just a few shekels out there. Okay, so what the market is communicating to you and I right now. We also know the levels to pay attention to that would negate that, right? And you've got to understand both sides of the trade always. But right now, it couldn't be more clear. Those of you that were looking, that were for a period of days, were saying, how do I get in on the short side? David wrote GFI, but really he meant to say GIFT was the perfect Gertley, and that is the gift that HM has given to you. So if you are a believer in pattern recognition, that is the gift that was provided to you today. You don't have to take that gift. I'm just telling you that was the gift that was provided for you today. And the nice thing about technical analysis is when one gift doesn't work, we get to pull our cards off the table, reload for the next gift. And that is a beautiful thing. So, folks, stay tuned. David White is going to be up next because it's Fantastic Friday and it's Fabulous Friday. Of course, we have Tom O'Brien from 3 to 5 to take us on home. So not much else to report here. Have a great weekend. Always remember that things happen for us. In fact, if you recognize that, if you know that, if you find somebody who's not having a good day and having a good week, and somehow give them a compelling future, you will see a total shift in their physiology, their face, and everything. Everything happens for us, folks. I'll be happening for us again on Monday, so have a great weekend. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.